I think at the headline level, obviously, it looks very cheap, but you cannot only consider the valuation. You need to dig down into the numbers. If you strip out, if you did it on a sector-neutral weighting, you would probably get the UK on a PE of about 14 times. So we are having huge influences from financials, from energy, and from materials, which are trading on single-digit PEs. So you need to be careful what's under the hood. You can't just buy for valuation. Valuation has a long-term driver, but you need the near-term momentum. And near-term, we do expect earnings to weaken a little bit in the UK. So we think UK will probably perform broadly in line with wider equity markets.
Well, that was going to be my question to you. It's so clear that valuations are depressed in the UK, but I used to work on the sell side in equity research, and we were always told valuation is not a catalyst. That cannot be your buy case for a stock. So
it's funny, isn't it? You were told that it's not about the valuation.
Not that it's not about the valuation, but that's not enough for a buy thesis. Yeah. Just because a stock is cheap doesn't mean it's worth buying, because there needs to be a catalyst, there needs to be momentum behind it. And it sounds like just because the UK market is cheap relative to other markets doesn't mean that these stocks are going to catch up.
No, I mean, the UK has been cheap for years relative to other markets, and it was only last year that the UK outperformed. Most of the other years, the UK has underperformed despite being cheap. So, as you say, you need a reason for it to re-rate. The move in rates could help, but at this point, I think, we've seen the best of the UK outperformance for now.
Let me be boring and say that actually on one valuation metric, it's really not all that. And the one I'm looking for, and I've just found it, okay, the FTSE 100 trades on 3.9% dividend yield. You got it? Have you got the board for me? The 2-year. We got it. Oh, thank you guys, you're brilliant. Look at that. 5.1% for just parking my money in boring old gilts. I love the yield of the FTSE as an argument for buying the FTSE for many, many years. Now, if the only reason to buy is your yield, there's your product.
Yeah, and I think in the short term, I would prefer to have actually fixed income versus equities, because you're tapping into those yields. Yes, the sort of cash yields are quite high, but obviously as growth slows, towards the end of this year, probably into next year, then the base rates will start to get cut, and then that will bring the cash rates down. That will benefit the fixed income space. So I would favour fixed income over equities because of where we are in the cycle. I mean, obviously that yield differential
I feel like the Spartans back though. If was the response, I think, to the Persians during those wars, and I think the answer, if you conquer our land and all that was the point. But if we don't have stagflation, if we have stagflation, then all bets on that scenario are off, aren't they? Inflation high, recession, they have to keep the rates higher, gilts will stay low, and the yield will stay higher.
Yeah, and it depends on your definition of stagflation, but if growth slows, if demand slows, unless there is a reason that of price controls or something that's keeping prices artificially high, then inflation will fall. Now, you get scenarios where you have low or no growth and high inflation if you're keeping prices up. So labour market could be one if you have enforced price, sort of minimums, which doesn't tend to happen when you're not unionised. The unionisation rate is about less than half of what it was in the 70s. Arguably energy, because of the underinvestment that we've had, could be viewed as a sort of input, but actually the prices of energy have come down quite significantly. So whilst in theory it could be the one that provides the sort of floor, it actually isn't. So actually, if growth slows significantly, which it does and it is, eventually you will see that coming through into the inflation numbers, because demand destruction happens.